Thanks for joining us on lunch. This is Bloomberg Quentin Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian markets extend gains. Nifty trades above the 10,650 mark. Broader markets outperform.
Fortis Healthcare gains close to 3% after the Munjal Burman family combined gives its go-ahead for the company to invite fresh bids for the firm.
Manpasand Beverages is locked at the lower circuit, down 20% after Deloitte resigns as the company's auditor.
Oil marketing companies are among the top gainers on the Nifty today after oil prices fall, but petrol and diesel prices are hiked for the 15th straight day.
And NTPC and L&T are among the two big earnings this day.
We'll get to that, but first the markets as always. Neeraj is here with a closer look on what's been a relatively okay day so far.
Yeah, it's one more day. So third day in a row, Harsha, when we're getting some very good cues from the markets. And more importantly, unlike Thursday, both on Friday and in today's session, the broader market strength has been evident as well. In fact, both the Nifty and the Nifty Bank on this expiry week are trading above the 20-day moving average, which actually augurs well for the near term. So while it's expiry, and you would argue that after 3 or 4 days of a gain, could there be some course correction? The markets are not showing any signs of that. The Nifty Bank, in fact, has outperformed in the last few days. And in today's session, yes, IT is not participating, maybe because of Tech Mahindra numbers, maybe because of the rupee reversal. So IT is off. All the IT names are down, but pharma is doing reasonably okay. Banks are doing reasonably okay, and therefore we have these gains on the bourses. But I think the bigger determinant is what's happening to crude. And as a result of that, the impact on some of the other stocks. So OMCs, all three of them doing exceptionally well, even upstream or gas distribution companies. GAIL is doing reasonably well for itself, and aviation is pitching in as well. SpiceJet has a 13% gain. Jet Airways, 6.5% gain after trading very close to 52-week lows and correcting almost 50%. So a bit of a pullback from the lower levels. Not saying this is a reversal of a trend, but a bit of a pullback for the aviation stocks as well, courtesy what's happening to crude. And yeah, lastly, you guys said in your headlines as well, 1% beverages is down about 20%. That continues to grind lower because of those auditor concerns. On the flip side, confess ignorance as to why such a sharp move, but Just Dial is up about 20% in the session today. Some good news, yes, but nothing to warrant. Okay, now about 17%. But nothing to warrant this kind of a move. We're trying to find out what could be the possible reasons, but 20 million shares traded, 20% gains. It's a really strong move at the broader end of the spectrum.
All right, Neeraj, thanks so much for that. That's the structure of the domestic markets. If you're looking at the domestic markets vis-a-vis the global markets, it looks like India's correlation with the global markets is at a 10-year low. Kartik Goyal is with us with the charts. Kartik, what are the charts saying?
Yeah, so the weighted average correlation of India's currency, bonds and stocks with global markets is fast approaching a 10-year low. And that's happening due to a variety of reasons. It's also due to the domestic nature of the Indian economy. It's a less correlation with the global cycle. And you know, like that. And especially in the case of bonds, the disconnect is more pronounced. It's again, you know, Indian bond market is the most restrictive bond market in Asia, with foreigners owning just 5% of the local bonds. Also, if you look at the global bond indexes, India is just not there. So the disconnect is more pronounced in the bonds area. And so like that.
What are investors saying? Is this sort of decoupling for the better, that India is in a separate zone of its own, or are there risks involved?
Yeah, definitely. Investors look at it as a very positive sign, and especially Aberdeen, they continue to be very bullish on Indian bonds, and they really see it as a very good hedge in times of turmoil. And so they are very, even despite the recent sell-off that we've seen. Many global investors, they continue to look at Indian assets in a very favorable manner.
Kartik, we leave it there. Thank you so much.
It reminds me of what Y.V. Reddy used to say whenever the word decoupling came about, which was it's contextually convenient but inherently illogical. I wonder.
So typically Y.V. Reddy, isn't
yes.
it? All right, let's move on. Fortis Healthcare moved back into the green after the Munjal Burman family combined gave its go-ahead for other suitors to put in fresh bids for the company. Remember, this comes after 4 out of 5 board directors who had voted in favor of their bid were removed at the EGM held last week. The combined maintains that they have the most lucrative offer so far. Yatin Mota standing by with more details on this race for Fortis. Yatin.
Good afternoon, Harsha. And as you were mentioning, you know, we have the go-ahead coming in from the Hero and you know, Burman family offices, you know, with respect to their bid. Now, you know, they have issued a press release which says that the Hero and Burman family office is in favor and is giving a consent to reopen the bidding process. And as you were mentioning earlier, the board of Fortis Healthcare had shortlisted the Hero Burman combined bid for Fortis Healthcare when it comes to the fund infusion. And 3 of the directors resigned before the EGM, and one of the directors, which is Brian Tempest, he was removed by the shareholders in the EGM. So these were the directors which approved the entire transaction. And since it was strategic in nature, probably we have Hero and Burman family office talking about reopening the bid, which will probably be in favor of the minority shareholders, and hence the reaction in the share price. They, however, maintain that their bid is one of the best so far for Fortis Healthcare shareholders, and also they say that they will be interested in participating in the bid moving forward as well. So there might be a chance that moving forward there could be the board which will take a call on whether or not to shortlist a non-binding bid, binding bid, and if the existing bids are taken into account, probably will there be a revision moving forward. So all of the options are open. Probably the shareholders seeking a better valuation, and Hero Burman family clearly stating that they have no issues when it comes to the further bidding, and also they will be more or less in the game when it comes to the bidding for Fortis assets.
All right, Yatin, thanks so much for that. We're moving to the end of the fourth quarter earnings season. 43 of the Nifty 50 companies have reported their numbers so far. Darshan Mehta has put together a scorecard on what the earnings season is looking like so far. Darshan.
Yeah, so it doesn't look bad at this point of time. Majority of the companies have either come out with strong numbers or in-line set of numbers. I think if you're looking at the numbers that are weak, basically compromises of certain private PSU bank, certain private banks, a lot of auto names, and pharma. So that's the basics that we're getting. Now, if you take a look at the past trends, this time around, if you're looking at it, 14 companies have reported strong numbers, 18 in-line and 11 weak. So the number of strong companies reporting numbers have gone up. The numbers of inline has come down, and the number of weak numbers have gone up. So it's been a rather mixed sort of number this time around, but nevertheless, we've had a decent 14 companies which have reported numbers, 7 more to go. Individually, if you're looking at some of the sectors, UPL was the only company in the agri space, meets estimates after 2 weak quarters that came in. The FY19 guidance was cautiously optimistic by the company. Again, if you're looking at Ultratech as performance, fifth strong quarter, higher volumes and cost efficiencies aided the numbers. Ultratech is the only cement company. ACC and Ambuja are out of the Nifty. As far as the numbers from the FMCG space are concerned, strong numbers by the FMCG space. HUL did well. Titan came well. The guidance was also rather optimistic. So consumer and FMCG as a pack did well in this earnings season. So did the metal counters. Higher volumes and commodity prices aided the numbers. So most of the metal counters did well in the numbers this time around. Apart from it, the Adani Port is the only port company in the Nifty. It met estimates. The volume growth and the SEZ income did manage to surprise this time around. The other sectors that we want to speak about, and that will come up on the screen, the auto numbers were rather weak. Maruti, weak numbers after straight 6 quarters of strong or inline numbers. Inline numbers for Hero for this 5th straight quarter. Bajaj Auto was the only one that did manage to do well. Apart from it, it was rather weak numbers that came in from the other companies. Jaguar Land Rover did manage to disappoint JLR, and that affected Tata Motors. Eicher Royal Enfield was rather weak this time around. The other sector that you need to talk about is the oil space. Reliance was weak after quarters and quarters of outperformance. Refining margins were weak. Geo numbers were weak, so Reliance disappointed. The oil marketing companies also, the refining margins did manage to disappoint. So HPCL and IOC have disappointed. BPCL is yet to report its numbers. As far as the other sectors are concerned, IT, strong performance after 6 quarters of muted performance came in by Tata Consultancy Services. It was the big outperformer. The other companies were rather disappointing. Margin guidance disappointed for Infosys this time around. Similar case was with HCL, when the numbers were okay, but the outlook did manage to disappoint. Wipro was weak this time around, and Tech Mahindra came out with numbers yesterday, which was rather strong in trade, but the counter is reacting negatively to the numbers today. The other sector that we want to talk about is the financial services. Asset quality improved sharply for Yes Bank. That counter did manage to rally. Axis Bank posted the first quarterly loss since listing, so that was a big disappointment, and so was the case with ICICI when the NPA rose significantly. provision rise and report in the second quarter in the earnings. SBI, the commentary was rather strong, and the Bajaj twins managed to do extremely well on robust growth and strong outlook in the fourth quarter. And finally, if you're looking at some of the other sectors, telecom, Bharti Airtel did manage to do well, but that was not the case with Bharti Infratel, which disappointed with numbers, and so consolidation impacted tendency for Bharti Infratel. And finally, if you're looking at the sectoral performance in pharma, Sun Pharma did well, the financials were strong and outlook was rather strong, but the other companies did manage to disappoint this time around. Muted earnings that came in, and that is something that disappointed. Lupin Cipla, and this has to be Dr. Reddy's. So Dr. Reddy was a Nifty company that managed to disappoint.
Darshan, thank you for that. Let's talk about the banking sector now, especially state-owned lenders. They throw a spanner in the works, forced to accelerate the cleanup of their books. PSU banks have reported a cumulative loss of over 50,000 crore. Vishwanath Nair is standing by with the roundup of the earnings for banks in the fourth quarter.
Mentioned, there's a 50,000 crore additional losses that were reported in the fourth quarter alone. Let's look at the first chart here. As compared to the fourth quarter of the last financial year, FY17, where the total cumulative losses was about 4,300 crore, the total losses have risen to 53,000 crore. And this is, remember, just 17 listed public sector banks. There's Bank of India, which is still not reported results. It should come in a few hours, but that number then would likely increase. Let's look at what happened with the private banks. Now, the private banks were not untouched with the kind of stress that already exists in the banking system. Their total profits have dipped from about 11,000 odd crore to 7,200 crore. So there's a clear stress that has come into the private banking system as well. Axis Bank, as Darshan was earlier pointing out, reported the first ever loss since listing. The total gross NPA figure again has risen from 8.1. So before that, before the third quarter of FY18, the rise in gross NPAs had slowed down slightly, but during this fourth quarter, that number has gone up again by about 70,000 crore. So that is a significant increase on the gross NPA figure as well. Lastly, on the provisioning front, because that is something that has really impacted the system, the total provisioning has more than doubled from 66,000 crore to about 1.29 lakh crore just during the fourth quarter. Three main issues. Firstly, the RBI's Feb 12th circular, which really impacted almost all banks. Secondly, there was the M2M loss, which a lot of banks actually took up in the fourth quarter and did not choose to spread it over the next couple of quarters as the RBI had allowed them to do. And lastly, on gratuity, again, a lot of public sector banks reported this, provisioning against gratuity for their employees, that clearly hit their profit number. That's what we're seeing during the fourth quarter now.
All right, Vishwanath, thanks so much for that. That's the PSU banking space. Many of these lenders, though, after reporting a dismal set of numbers in the fourth quarter, have come out and assured investors that, well, the worst is over. Will this actually hold true this time around? Vishwanath Nair caught up with PS Jayakumar, the MD and CEO of Bank of Baroda, and asked him why investors should believe them this time round.
Our business is not only about NPA management. There's a wider set of roles that we play as a financial institution, and something more on account of the fact that we have a public sector ownership and character. So it is that, but we must also give recognition to the fact that for a number of sectors, the expectations with respect to the improvement in the sector has not exactly played itself over in the last 12 months. Power is a case in point. But even if you were to take the power sector and look at it for the next 18-24 months' time, we are seeing significant increase in the value of traded power. Presumably that is going to result in more PPAs being signed because they are at considerably higher value, higher cost than PPAs. And those in turn can then again bring certain degree of stability. But the fact is, if there have been delays in completion of the project, those are losses. The more the delay there is, or continuing delays, these losses tend to exacerbate. So to answer your question, I would say to you this way, that for all the banks, public and some of them private in the same sector, the results are, the reasons are quite the same, which is the resolution issues have affected everybody in equal manner. And the set of economic environment and those behaviors of those assets have behaved in a near identical manner. So it's not necessarily a public sector cost reason, ownership cost reason. It is a consequence of the assets that we financed, their outlook and their response to the economic environment and the resolution environment in which we have worked. But at the same time, you can see from the data The recovery levels are improving, and the provision coverage ratios are improving, and the net residual issues are diminishing. So there is a logical point at which the problems would hopefully get resolved.
This quarter also, there was a divergence about nearly 3,000 odd crore for your bank. Typically, we've come to not expect something like this from Bank of Baroda, but then this quarter, this came as a bit of a surprise.
Yes. See, the divergence, in my view, what has happened for us was essentially the way we recognized those losses, those provisions, NPAs, was based on the consumer behavior with us in the way they behaved with us. So some of these accounts were fully compliant with the rules. The divergence arises because they were not paying to some other banks, and it's reasonable sometimes that we may not have all the information to make those decisions. In a couple of cases, we intellectually feel that what we did is right and we hold that position, but at the end of the day there is a regulator and the rules require that they follow them, and so we are following them. So it is not necessarily a deliberate error or an intentional error or oversight or a failure to read the issue. It is just two perfectly reasonable people can have a different point of view, but eventually one's view prevails, one person's view prevails. And that's
Is it because it's the regulator's view?
It could be regulated, sometimes it could be the court, it could be any number of reasons. But if you look at it, of the amounts that was mentioned as divergence, bulk of it was taken in the first and the second quarter. Certain amount were taken in the last quarter because the divergence report itself was disclosed, came to us, was closed only somewhere between January and February, the audit process. And some of those accounts which we have provided for in this quarter as a divergence have also been recovered in June. So, we can expect that the final situation to mirror to what we did. So, what would have happened had we recognized this, had we recognized these accounts as NPA? We'd have taken another 500 crores of losses, provisions in the last year. Right. And that would have meant this quarter, this year, would have been 500 crores better. But again, in the larger scheme of things, those are not material numbers, and the net financial results in terms of net worth at this point of time is precisely where it is today, whether we had taken it earlier. So I'm not condoning, we have to recognize losses, but this was not an account of an effort to manage the books of account. It was a genuine different points of view. Now a few other things have changed since then. Now there is a lot more emphasis on credit data. So we have concurrent information of how customers pay with the other banks. And since we are also looking at the repayment history with the other banks, some of these issues should not happen. That broadly is what I would say. But still, it is still possible, even with all of this said, there could be a point of view that we as operating managers may feel about a particular account. Right. A view that may not necessarily the regulators may hold.
Well, that's management of Bank of Baroda. That's been, we've seen the numbers reported so far of large Nifty companies and of the banks as well. Three more companies from the Nifty will be posting earnings today. We'll be watching out for L&T, NTPC and Aurobindo Pharma. Let's look at the analysis of what analysts are pricing in from the capital goods to infrastructure major L&T first. Darshan is back with us with those numbers.
Yeah, so basically it will be a muted quarter for L&T. We are seeing an 11% growth on the top line for L&T. On the bottom line, it will be a decline of 1% and slight improvement in margins, close to 12.2% versus 11.8%. Order inflow is extremely important. In the exchanges, they've given orders or announced orders worth 30,000 crores. We expect another 10,000 crores of orders to be announced by today. So 40,000 crores will be the order inflow that they've done. And basically, this will be in the infrastructure, heavy engineering space. That is where, and hydrocarbon space. This time around, lower other income and higher finance costs is something that could dent the profits of the company this time around. What's the guidance? Post the third quarter, the management had maintained the guidance. They've said a 12% revenue growth, a 25% margin improvement, and they're saying that order inflow will be flat for the full year. So that's what we are watching out for L&T.
All right, the government has finalized some reforms to ease the financial pressure on sugar mills. This includes fixing the minimum selling price of sugar at 30 rupees per kilogram. Pradeep Parija of Bloomberg News joins us with that exclusive. Pradeep, what do we have? What is the information?
Yeah, basically the sugar mills are suffering from falling prices. So what the government plans to do, it's a proposal by the Food Ministry. What they plan to do is to fix a benchmark price, floor price of 30 rupees, so that prices shouldn't go below the ex-factory price of sugar mills shouldn't go below 30 rupees to give them some kind of return, and at the same time they'll help sugar mills to stockpile about 3 million tons of sugar to sort of restrict supplies into the market, and to do that they'll help sugar mills with 12 billion rupees to stockpile sugar. Over to you.
Pradeep, thank you for that. That's the proposal by the government to bolster what's going on in the sugar industry. Retail fuel prices, meanwhile, have been heading higher for 15 days now. But that does not mean that oil marketing companies have seen any sharp revision in their marketing margins. This despite the fact that petrol and diesel prices have touched lifetime highs. Sumit is standing by to take us through these details. Sumit.
So if you see, fuel prices have now increased for the 15th consecutive day. In fact, in the last 15 days, the retail fuel prices, that is petrol and diesel prices, have increased by at least 3 rupees per litre. Now this is after the prices were unchanged for the 19 straight days during the Karnataka elections. However, despite this current rise in fuel prices, there has been no respite in the earnings of the oil marketing companies. As you can see here in the month of May, on an average, the gross marketing margin earned on sale of every litre of petrol and diesel has fallen to close to 90 paise per litre and 1.2 rupees per litre on petrol and diesel. Now this is a fall of as much as 70% compared to the last month, that is April, and two reasons why this is the case. First is that the cost is still at an elevated level. As the daily pricing is done on the basis of 15-day average rolling prices, this elevated crude prices is still limiting the leeway to increase the fuel prices for the oil marketing companies. And second is that the current hike in fuel prices is just covering up for the earlier 19-day halt in fuel prices, thereby bringing down the overall gross marketing margin earned by the oil marketing companies in the month of May. However, given the current fall in crude prices and this continuous increase in retail fuel prices, this gross marketing margin is expected to come down to its normalized level, and this is the reason why we are seeing a rise in the oil marketing companies in trade today.
All right, Sumit, thanks so much for that. The Central Electricity Regulatory Commission is willing to relook at the present tariff structure. The regulator has proposed a three-part structure to replace the existing framework. Jayesh Khilnani is here with us to give us some of the details of this proposal. Jayesh.
Ira, first and foremost, important to understand that NTPC and Power Grid will be on focus on the back of this, because these are the two companies that get their income from a regulated equity point of view. Now, the CRC is actually evaluating the two-part structure tariff that they had, and they are now seeking industry feedback on whether this move could actually work and replace it with a three-part tariff structure. Remember that this tariff, the new consultation paper, that will be open for feedback till July 15 this year. So what they're saying essentially is that the two-part structure, that in fact works well in case there is a power deficit scenario, so which is currently not the case. And if you look at the three-part structure that they are referring to, the tariff will be divided into three sections, which is the fixed charge. Now, on account of this, the DISCOMs will actually go ahead and sign more PPAs, and there'll be change in the variable charge, and they will introduce an energy charge as well. So that's those are the propositions of the three-part system that we have. Now, why is this important is because we have seen that the plant load factors have been at a subdued level. In fact, currently, if you look at the plant load factor, those are running at about 60% odd, and FY18 was at about 59.68%, which is substantially lower from where the FY10 PLF was at 77.5, and the government is in fact projecting for FY22 that the PLF could be near 56.5%. So this will be an attempt to revive the plant load factor for these thermal plants.
Jay, thank you so much for that. Exchange-traded funds will require a few more years to be extremely successful, says Hemendra Kothari, market veteran and chairman of DSP BlackRock. Speaking to Bloomberg Quint, he also pointed out various steps that the government must take to make investing easy. Listen in.
I think ETF can come over here, but problem of ETF in India as of just now, there is not much secondary business. ETF means exchange traded fund, and that that's not happening at this moment in this. So that requires again few years of understanding in the marketplace, more traders required, more secondary market business required there to ETFs to be really successful. So passive funds, otherwise you can call, they will be there, and I think they can be successful. On one side, various kind of passive funds will come, smart beta funds, etc. So yes, there will be two lines. One, active funds. Active funds will have to show that they beat the simple passive funds, in fact, or ETF, for example. So we have to see how it progresses. My view remains that people will divide their money. They will, depending on the performance of past, of how the fund manager has done in 5 years period, rather than looking at 6 and 1 year period, and that's the way the business will go.
Okay. You mentioned in one of your responses that the growth in the mutual fund business could also vary depending on what the global macros are. As of now, I just want to shift the focus of this discussion to what's happening currently in the world and in India as well. The macros are turning adverse for India, cracking at the seams, so to say, with oil doing what it is doing, the resultant impact on the rupee as well. Does this situation worry you at all?
Definitely is of concern for everybody, and but sometimes it can create an opportunity, because the market sometimes react to that, and sometimes overreact, and there could be an opportunity to buy also. So one aspect to look at it this way. Second aspect, I think it's very important, and hopefully the government would look at macro aspect and keep it in mind, to keep current account and fiscal deficit under control. And for that, it's possible that interest rate may move upwards, the possibility to keep inflation under control. Now we have to see how it develops in the end. We cannot forget that election year is going to be next year, beginning sometime, or mid next year. So keeping that in mind, we believe that equity will remain a long-term sustaining investment side. At the same time, depending on the age, people like to keep some of their investment in fixed income also. There also the opportunity from mutual fund is that you don't have to necessarily lock your money. You can always withdraw the money very short and very convenient way of withdrawing. So mutual fund industry itself, I personally feel, will grow equity, and at particular time more in fixed income. That can happen.
Okay, interesting. Do you foresee the possibility of what you just mentioned, which is that the markets may at times react or overreact to some pieces of bad news? We are right now surrounded by a number of moving pieces and some bad news as well. How high a probability do you think that that will be a reaction, an adverse reaction?
Already we are seeing it in the last 1.5 months, in fact. So this is nothing which has not been to some extent discounted. But it depends on new development taking place from now that the market will react.
What are you watching out for the most, Mr. Kothari?
So how we are able to manage our macro, because the foreign investors will look at that. Second aspect, we have to see what are the corrective actions the government will take for that side, and we have to see. In India, we have to encourage equity because risk capital, which is a shortage. Sure. And world over, not only in India. And we have to encourage equity, so we have to incentivize to some extent. And I'm sure various people are talking to government on the same.
Okay. Something that will have a direct bearing on the mutual AMC industry as well and the flows, Mr. Kothari, is whether the micro, as we call it in day-to-day parlance, the earnings that are coming in, whether they look set to grow, and if that happens, will that take care of the macro concerns? When you speak to businessmen, what's the kind of confidence that you gauge from India?
I think micro and macro follow each other, or either each other. But the micro sometimes is of past results. The results come out. Today the results are still coming out well. India is one advantage compared to a lot of countries, is there is a, by and large, there is always a demand because of the population. So that's one plus point which is there. Temporary, of course, it can have dips on certain sectors, particular sectors, affluent sectors, certain slight slowdown takes place, something. So you say motor cars or air conditioning or some other things. But otherwise, there are sectors which continue. There are sectors which will benefit with rupee-dollar situations like technology. So we have to see. I think it's a question where the active equity will have, mutual fund will have advantage because they will be able to choose the right time, right things.
All right, we'll step into a quick break. Up next, we will focus on the currency markets. Pradeep Khanna of HSBC joins us with the factors that are moving the Indian currency.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts. कितने plain और simple. Fog scent. Plain और simple white shirt को बना दे special और fashionable. Fog scent. New fashion wear for men.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you.
Do you have analysis paralysis, a case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior most editors. Weekdays at 8 a.m.
Back on lunch, the headlines of this hour. Markets extend gains, Nifty trades above 10,650, broader markets outperform.
The Donald Trump, Kim Jong-un meet may be back on the table. The US president says a delegation has reached out to North Korea to work out the modalities of a meeting.
Oil prices post their sharpest drop in a year after Saudi Arabia and Russia are set to increase production. See, it looks like a good day for the markets across the board. The benchmarks and the broader markets seem to be doing relatively okay. Agam is here with some of the key movers in the last 30 minutes.
Well, the major indices are advancing for the third straight day, with the Nifty now inching towards 10,700. And with that, the broader markets are, as a matter of fact, for a change, also outperforming the benchmark indices, unlike what we've seen over the previous few days. When it comes to turnovers, we're expecting turnovers to rise, gradually as in the lead up to Thursday, that is expiry. But for now, when it comes to cash turnovers, largely average. It is a slight pickup in the F&O turnover, standing at a little over 4.8 lakh crores. In the broader markets, again, what really stands out is the pharma stocks. We are looking at substantial gains in Sun Pharma as well as Lupin, which is leading the pharma index up as well. And we also have a lot of strength in some of these OMCs like Hindustan Petro, BPCL, as well as IOC advancing. Of course, GAIL also lending strength to the entire oil and gas sector in general. We have some weakness in Tech Mahindra Mahindra and HCL Technologies along with TCS. So some bout of profit taking coming through on some of these IT companies, especially given the fact that we've seen such sharp up moves last week. But on the whole, as far as the indices go, looking strong and well, looking at some crucial levels to breach.
All right, Agam, thanks so much for that. Let's move on to the currency markets. Bit of relief on the rupee, linked obviously to crude prices. Crude prices have come off. The rupee has recovered as well. But what's the big picture on the currency, and what are the elements that are going to determining how the currency moves through the rest of this year? Pradeep Khanna, Managing Director and Head of Trading at HSBC, is joining us. Pradeep, good afternoon. Thanks for joining us here on Bloomberg Quint. For now, Pradeep, it does look like oil continues to be sort of the biggest variable, which is going to determine whether the rupee takes out 68, moves to a new low, or manages to stay in a band of, say, 66 to 67.
Absolutely. I think at this point in time, oil is clearly the largest driver of sentiment, and I think rightfully so, given that the oil price will immediately add or reduce both current account as well as fiscal deficits. So I think very large bearing for the country, and clearly markets will react to that pretty much instantaneously.
What's the sense that you're getting from external factors, particularly how the Fed has reacted, what's going on with the dollar globally? What are the external factors that are influencing the direction of the rupee?
Right. I think, broadly we break it down into, the current account deficit, which estimate this year is going to be somewhere in the region of about 2 to 2.5% of GDP. And then financing. Clearly, while we have stable FDI inflows, portfolio flows depend a lot on expectation of return as well as the cost of funding, for investment. So with the Fed hiking and looking like they've got more to go this year, clearly cost of funding is going up, and therefore on a relative basis, it isn't as attractive to put money into not only the Indian market but emerging markets in general. So that I think is the other factor that we really do need to look out for. Apart from the oil price, a lot of how the dollar has traded also recently has been a reaction to market gauging how aggressive the Fed is likely to be this year. And as it increasingly begins to look as if the ECB will delay any action on its part, I think that will again be one of the key drivers that we need to look out for.
Pradeep, exactly. One is, of course, the current account deficit, and yes, the quantum of that is going to depend to a large extent on oil, although not entirely on oil. But on the financing side, we've seen a fair amount of debt outflows. I don't know if that's linked to, global, say, EM bond funds seeing slower inflows or outflows, or if it's an India-specific thing. But do you suspect that will continue, and then that could mean a change in the BOP position broadly?
I think it is not entirely an India-specific thing. To a certain extent, emerging markets and relatively higher interest rate emerging markets, and especially where they are oil importers, have seen some amount of outflows. I would suspect, that we should be pretty prepared to see a little bit more outflow over the next 2 to 3 months, because markets are clearly in a period of readjustment, to the realities, the way they are being judged. While oil has corrected quite nicely, from just under 80, I would suspect with all the noises coming out of, OPEC, Russia, etc., possibly there is going to be an attempt to try and stabilize somewhere here. Maybe it will take away the potential panic of a what-if scenario. What if it, oil were to go through 80 and, up towards 90 or 100? Maybe that, goes away for the time being. But really, are we looking at a substantial move down in the oil price? I don't think, there is any confidence in that kind of view either at this point in time. So I think as we adjust to the new realities, and as we keep an eye out, for the Fed and other geopolitical developments, I think we should be a bit prepared that we are likely to see slow and steady outflows for the next 2 to 3 months.
So then, Pradeep, even if oil were to stabilize, we are perhaps looking at a lower band for the rupee than was assumed at the start of the year. Because I remember, doing start of the year interviews, and a bunch of people said to me that they expect the appreciation of 2017 to continue in 2018. That seems like an unlikely scenario.
Clearly so, because if one goes back to 2017, the first 3 quarters of that calendar year, current account deficit was substantially lower than where it is today. And also the appetite of foreign portfolio investors was significantly higher. So just the balance of payments position created a large kind of potential for the currency to strengthen. And today it's just the opposite. So I would definitely think that we are not looking at substantial rupee appreciation at this point in time. And the question really comes, has it depreciated enough, or is there a little bit more to go? Myself, I would tend to think that if oil kind of consolidates somewhere around here, that the rupee will continue to trade with a little bit of a weak undertone.
What is your view on how the RBI has viewed the situation, Pradeep? You are seeing the RBI move towards a hawkish direction. So in the medium term, are you anticipating the rupee to get appreciate a little more? Are you seeing the RBI intervene in the currency markets a little more aggressively?
To my mind, I think a little bit of intervention from the RBI has been there, will always be there when we see fairly large, moves in a particular direction, be it up or down. So that I think is a given. And also, as the extent of the move gets larger, the quantum that the RBI may choose to supply to the market also can go up. So I think that is something that we should expect. With regard to tone at monetary policy, I think the reality today is that the bond yields, almost all yields that are there in the market, whether it be where people can access even short-term money, whether it be where 10-year benchmark securities are trading, they are substantially elevated compared to the official policy rates. So I think at this point in time, move towards a slightly hawkish tone. Raising of official policy rates is probably, putting the correct sound bites in place, reassuring investors that the RBI is indeed very focused on inflation. And I think the proper communication needs to come along with that, because given that market rates are already so much higher, I don't think the RBI may want to put in a message that the hike in official rates necessarily warrants substantially higher market rates. It could just be one having led the other.
Pradeep, that's a very interesting point, because I think we were just debating that if at this stage the RBI were to perceive that it's behind the curve, hike rates to sort of adjust that, but it sends a message to the market that it's starting a rate cycle, then the elevation of rates in the market could be even higher. So it's a tough one at this stage, right?
See, that's the point exactly. I think the communication has to be right, because if one goes back and thinks about it fundamentally, the whole objective of raising policy rates is to nudge market rates higher and thereby, make money incrementally a little more expensive and slow down economic activity and curtail inflation. Now, if the rest of it has already happened except for the first step, which is the official rates, then I think clearly messaging from the RBI that A, they are hiking, B, they are absolutely on the ball with an eye out on the inflation target, but C, that market rates have already moved up quite a lot, and therefore they don't necessarily think that market rates need to move up one for one, I think would be quite essential at this point in time.
Sure, Pradeep, just a quick last word. Didn't get any house targets from you either on the currency or on the 10-year. Do you have any that you can share?
I don't think we have a house target that I'm aware of on the 10-year. Currency house view is at 66, but I think it's a little bit dated. We are trading above that, and I personally don't think that we are going to see significant amount of rupee appreciation from here. So, that's where we are at this point.
Pradeep, thank you so much indeed for joining us. That's a view from HSBC on the currency markets. Good days for India Inc. Maybe over in the offshore syndicated loans market. Rising cost of funds may force foreign lenders to hike rates from a 10-year low. Anurag Joshi is standing by with what this means. What does this mean for Indian companies?
So Indian companies over the last few years have enjoyed falling pricing. I mean, interest rates have been falling, and at least the big companies have been the biggest beneficiaries of this trend. So now that's going to change because lenders are becoming more selective about Indian syndicated loans, and there are a host of factors like, the Fed has been raising rates, and we had a recent increase from the Indonesian central bank. We have a surging dollar. So these are the kind of factors where lenders are now sitting back and are demanding a higher rate from the Indian companies. So the options before the local companies is that they can go for club arrangement where they just tap into their relationship banks, a smaller pool of banks, and they can borrow money. But then that makes them more vulnerable to this smaller number of banks, and they can get hit if interest rates move up significantly. And in the recent past, we have seen a slowdown in the whole process of syndication compared with maybe last year, and we have some very big names where they have decided to go against syndication. And we have State Bank of India, which has just launched a $750 million loan after a gap of more than 2 months after they mandated banks for the transaction.
Anurag, thank you so much, Pradeep, for joining us.
All right, Prem Vatsa, the billionaire CEO of Fairfax Financial Holdings, discusses value investing, protecting against risk and opportunities for investment in the US and his native India. He spoke to Bloomberg News' Amanda Lang. Listen into that conversation.
I was fortunate enough when I began my career to be introduced to Ben Graham, value investing. So he had a very simple rule that said that when you're implementing value investing, trying to figure out what a company's worth, and then wait for the stock market to go down. Think of the stock market as your partner. And sometimes your partner is optimistic, then perhaps you should sell. Sometimes your partner is pessimistic, is right at the bottom, and maybe you should buy. That's simple. So, but when you're at the bottom or at close to the bottom and you have to be pessimistic, the market's pessimistic on the company, then you have to be contrary. You have to go against the crowd, and you do the same at the top. But it's basically trying to identify intrinsic value, and then you're not contrarian for the sake of being contrarian. You have to figure out what the value is first.
You've also taken big macro positions that have, in the case of the credit crisis, the mortgage market,
yes,
paid off handsomely.
Yes.
Sometimes those are contrarian. They go against the market.
Yes. And it's been, those have been contrarian, and they've taken some time to work out. But our number one goal at Fairfax in the investing our monies, our investment portfolios, and remember, that's all we do. We don't invest outside money. Our Fairfax portfolios is to protect it. Make sure we don't lose money first. So if we see risks around, we're careful to protect our portfolios. And so that's what we saw in 2004, 2005 with the real estate sort of bubble in the United States, and AAA rated bonds, and so we wanted to protect ourselves. Went right to 2008 before we had any problems.
You wrote in one of your letters, it's better to be wrong, 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 and then right than the other way around. What do you mean by that?
That's a good example is right what you just said. 2004, I think if you go back in our annual report, you'll see we talked about this, a worry about the real estate in the United States, the AAA bonds that were rated by the rating agencies, and we stayed away from it. And we were wrong in 04, wrong in 05, wrong in 06, and then in 07 it turned, and in 08 we did very well. But and then the key in 2009, 2008 and 9, you have to survive. A lot of companies did not, as you know. Biggest company in our business basically went bankrupt. And so we always keep that in the back of our minds, that we have to survive. We're trying to build our company over a long period of time, long after I'm gone. Our company is focused on going strong for a long, long time.
So what's the big macro call for you now when you look at the world with the equity valuations where they are and central banks beginning to move? What do you see?
So we see the rates going up, but what we see is 8 years of poor economic growth in the United States. So when you have poor economic growth, 2% or less, lots of pent-up demand takes place. So for example, in housing, housing starts have been very, very minimal for a long period of time. So what that means, Amanda, is that in the next 4 or 5 years, you have to make up for that, and then you've got new households being formed. And so, so you do that for housing, you do that for automobiles, you do that for infrastructure. There's, we think there might be a pretty long runway. And then to that, you add the new administration, what they've done on taxes and especially on depreciation, accelerated depreciation. You build a factory, you can write off the whole factory in 1 year. Huge, huge plus. And then, of course, infrastructure spending and rolling back regulation, as you see, Dodd-Frank got rolled back a little. And so we see all of that being positive for business. And ultimately, business drives the economy.
And therefore, inflationary, you had a bet on deflation for a time.
So, yeah, so we were thinking of deflation if everything went the other way. We changed after this new administration came in and instituted. We looked at the policies and said, my goodness, these policies are very, 21% tax rate in America. You have to go to the 30s. We've never had 21% corporate tax rate since the 50s. So it's and I think most people are underestimating that, the effect of that, still. So animal spirits are terrific for mid-market business, for large companies. Animal spirits are very good. So, and capital spending, as you know, in the first quarter was very, very robust. So I think there's one way in the United States, and the biggest economy in the world. When that economy does well, we all do well. Canada will do well, and the rest of the world likely will do well.
You have a fair amount of cash in the investment portfolio.
Yes.
A reflection of valuations?
Yeah, reflection of valuations, and we're stock pickers, right? We're value oriented. We're trying to find out what a company's worth and try to buy it below. As you pointed out, with the markets being high, you have to be selective. You have to look around, and that's what we're doing. Cash is a resultant for us. We're not finding enough opportunities, so it's not like we're having 40% cash.
Opportunities like Toys R Us.
Opportunities
interesting
like Toys R Us.
situation.
Our President Paul Rivett, who identified that as a huge opportunity. That is an example of a company in the United States having a problem, a lot of debt in the U.S., but the Canadian company was terrific. And so we were able to buy a company in Canada, which is well run, and at a very good price, we thought.
And there may even be opportunities to buy back into some of those U.S. stores, potentially?
The U.S. stores, that's a different market. They've suggested that, but we think that's a long shot.
So in the world, is it the U.S. then that you're looking at as the place for opportunities? Or
the U.S. is a good place. We made a big investment publicly. We talked about it, C-SPAN, which is a container ship company. And so you have to look around, run by a terrific guy by the name of David Sokol. But the country that we really are excited about is that happens to be the country I immigrated from 46 years ago, is India. The possibilities in India are enormous for business, big business, small business, all business. And we just think the possibility, we've been there for 20 years, so we know a little about it. And we've had many investments. We've created a company called Fairfax India, which invests in India. But I think the possibilities are enormous there.
There's been a sense about India, and Larry Fink said it to me not long ago, that it just keeps not living up to the potential. That we have great expectations for India, and it doesn't quite get there.
Yes.
But you're a believer.
I'm a believer because they have a prime minister today who's very business. He got elected about 4 years ago, and he's business friendly, and he's got a track record. When's the last time you have a politician who's run a state or a province for 13 years, 10% economic growth, real economic growth for 13 years, and then he becomes the prime minister of the country of country with 1.2 billion in population. Not easy. 67 years of socialism, and slowly but steadily he's freeing up the economy and making it business friendly. So I think they have an election next year, and he's got a majority. If that's repeated, in elections you never know, but if that's repeated, I think it will be repeated, India is in good stead. In very good stead.
The geopolitical really is a factor these days. As a value investor, a long-term investor, do you ignore that, or do you have to?
My political views are just that 40 years of experience. I've traveled all over the world. I find that countries that have business-friendly policies do really well, whereas countries that don't, suffer. And for the ordinary person, man, woman, and child, business-friendly policies provide employment, provide jobs, and I've seen it all over the place. And so, yeah, I'm sensitive to that.
It's Prem Vatsa of Fairfax. Let's talk about politics. It may just be 4 Lok Sabha seats, but it holds a lot of significance for the ruling BJP. The party is just about holding on to the halfway mark in the 543-member Lok Sabha, and a resurgent opposition will look to make the most of defeating the BJP in these 2 bypolls in Maharashtra and 1 each in UP and Nagaland. Aviral of the Quint now joins us with more details. Aviral, how do the numbers stack up from 2014 to now?
Well, Harsha, the results to these 4 Lok Sabha bypolls are going to be very crucial for the BJP, as you said. The results will be out on the 31st of May, and they will tell us whether or not the BJP is still the majority party in the Lok Sabha. When they came to power in 2014, they had about 282 seats. Since then, the BJP has not had a very good run as far as bypolls are concerned, losing as many as 6 seats earlier this year. Now, if you were to factor in the resignation of B.S. Yediyurappa and Sri Ramalu, 2 MPs from Karnataka who also won in the assembly elections, and also exclude the speaker Sumitra Mahajan, the BJP is well at 272 seats. If you factor in suspended BJP MP Kirti Azad and also another rebel Shatrughan Sinha, the BJP as of today for all practical purposes could be well below that majority mark, which is why today's bypolls are very, very crucial for the BJP. We have Kairana, which is in Uttar Pradesh, where we are also seeing a political realignment which could also serve as a blueprint for the 2019 elections. We have the BJP who is going to be fighting an RLD candidate supported by the BSP, and of course an understanding with the Congress and the Samajwadi Party. We are also seeing a similar realignment in Maharashtra, where Shiv Sena and the BJP, who are allies at the center, are facing off against each other in Palghar, and the Congress and the NCP are fighting together. This, remember, had also been really the BJP's claim of being the majority party in the Lok Sabha. The last government to have done so was the Rajiv Gandhi government in 1984, where it had 404 MPs in the Lok Sabha. So this really is very, very crucial for the BJP.
Aviral, thank you so much indeed for that. That's politics for you. Out of time on the show. Thank you so much for watching us today.